Hey everybody, welcome back to Ryan Makes Sense. Today we're actually going to be looking at copper stocks. This is a viewer requested video, and I have to say I'm quite impressed by what I've seen so far. I'm on FinViz, the world's greatest website. I went to the screener section. I just have copper as the industry. We have 8 stocks, and the performance year to date ranges from 6% to 82%. Copper has been hot. So what we're going to do, we have 8 stocks. We're going to review all 8 stocks. I'm going to attempt to do it within 20 minutes. So please bear with me on this. We are going to disqualify any stocks that are losing more money than they make. Um, quick ratio is absolutely disgusting, probably under a 0.5. And yeah, we'll see where we go from there. But definitely want to check all of these out because I mean they're all absurd amounts. Um, and I wonder if I could get actually it might show it. Okay, we'll look at ticker symbol ERO. This is the first stock on our list, copper stock. Wow, this one's been trading in a pretty predictable pattern here. Okay, so we're gonna leave that there. We'll probably remove that. Um, I'm trying to get a gauge on where we could potentially see future bottoms. And I think this might be the sweet spot. Right there. All right. So I chose that line because it acts as support, perfect support on this candle. Support for this candle, it falls through, acts as resistance, resistance, support, support. I need to tweak it just a smidge. I think right there is fine. Support, support, perfect support, perfect support, perfect support. Okay. And what I do see is also the stock has never gone and closed above this line ever. So I think we've definitely missed the copper cycle for this stock. We want to see it test this line here at 24 and then I maybe come back down. Copper could just rise up exponentially. And we can see right here, it looks like it's just the beginning of this move. Um, I am going to check ERO. I wanted to look at the yearly momentum on this one. A little bit different. I like to look at the bigger time frames, but the importance of looking at the yearly here, this could tell us if this is going to break for a multi-year expansion. And the way we're going to find that out is momentum, which is what's loading now. So I do apologize for the lag. Maybe. I hope it's loading. All right. While that is loading, actually, we'll just stay on it. So I don't see my slow stochastic giving me a read here. So essentially, continue. Let's see. Okay, so we're gonna let that be. Essentially, what we want to do is see how this reacts end of year. So we're only in May. We've got 7 months to break this here, which the strength is on the bull size, the momentum, the money. The relative momentum indicators on the bull side. So this is crazy. Sales are great. Shares outstanding, they did dilute 15, 17 million over the span of 5 years. EPS going down. So this looks solely like a momentum play. Definitely overvalued. Their quick ratios under 1. They are profitable, but this is a momentum play. Definitely a momentum play for sure. Not the healthiest stock. Market cap is 2 billion, mean a lot of big money is in on this ride right now. Gross margins are 33%, so that's great. Let's see. Let's see what we got for a balance sheet. Assets worth liabilities 2-1. They do have 111 million in cash. Total debt's 414 million. Not bad. They make 432 a year, 432 million. This isn't a bad stock. This is definitely momentum based though, and you can tell, look at this huge volume influx right here. It's up almost 100% in 6 months. So that's pretty crazy. I don't know what else to say about this one. I think I will keep all these copper tabs open and then we will rate them. The only thing I don't like about this stock, I mean, I do like that it is in a momentum cycle right now. You could probably carry this for a while. When you want to sell is when you see the momentum cross to the downside. So once this black crosses the red, you want to sell. Black crosses the red, you want to sell. Black crosses the red, but then you have the black going up to the red and it's giving a buy signal here. It's a little bit late. You'd want to buy here, sell here, buy here. So interpret this how you want. Next, we're looking at ticker symbol FCX. Apologies for the loading. I think it's time for a new laptop soon. All right, Freeport McMoran. And this one's just been consolidating between 27 and 27 and 49. So this is breaking out just now, it looks like. Yep. This one is one to watch. I think we're gonna goes all the way back to 96. Momentum's on the side. Quick ratios over 1. That's beautiful. They do offer a dividend. Not a big fan. Huge. This is an S&P 500. I do have some exposure to this, thankfully. Again, the PE is 45. It's quite high. Gross margins are high. They are profitable. Again, I think this one's just getting hot. I like this as my number 1 so far. And I only say that because it's literally been consolidating between here and here for, oh, come on. It's been consolidating, apologies, from here to there. So we've just broken out of our Darvis box. I do see substantial momentum coming here. Let's check here the FCX. The yearly is going to give us nice. Ooh, I've charted this one before. Oh, come on. All right. Beautiful. Right on top of this, it's breaking out. It's outside of this Fibonacci. I like this one. I really like this one. I think we've got at least another couple months worth of. This is on the yearly, by the way. Um, could be a couple years. I mean, this is blue sky breakout up here. We do have some resistance at 63 dollars. Once it's above that, though, the sky is the limit. And right now it's at 51. I do like this one a lot. A lot. So this is my number one for now. FCX. We're gonna move on to Hudbay. Wow, this one is up over 100% in less than 6 months. Wow, overall though, it's still down. It's got a long way to go. Um, it's got a long way to go. Let's see. We're in the monthly, yeah. So strength is all-time high. Momentum, beautiful. Money flow, beautiful. Relative momentum, beautiful. Like this is just huge momentum. Quick ratio is 0.87. Anything under one, if it's 0.90, 0.87, whatever, anything under one, if they were to shut their doors tomorrow, they would not be able to pay off all of their debts, all of their notes, um, liabilities, etc. So this one is ranked less just based on that. Sales, this is solid. EPS kind of plateaued, 27, 21. It's positive though, which is good. They did dilute shareholders in 2023 about 90 million shares. That's pretty rough. Gross margins 20%, not as great as FCX. They're profitable. Um, this one could get interesting. Institutions on 59%. Is that substantially higher though? Let's see. This is HBM. So again, 59% ownership. This is old data. New data says 62%. So not much institutional ownership. So, but you know what? Every time, if there's one company that gets in every time, it's Renaissance Technology. Oh, they did get in. They actually trimmed their position. So Renaissance actually trimmed their position. They get in early every single time. So they got in early and it looks like they're trimming. So I'm guessing they are probably looking pretty good. HBM, we're going to keep near the bottom. I mean, it has gone over 100% pretty quickly. It's definitely trading in an 8-year range. Once it does break out above 10, 9, 10, it could really get some legs on it. But again, there's 350 million shares float, higher than average volume, meaning there's people probably seeing what we're seeing now, just momentum. Yeah, yeah. So, pretty good. Pretty good. Um, again, I'm already at 12 minutes. I need to try and get through this. Ooh, this one's interesting. Looks like it's treading the lows. Ooh, it's not as established as the others, which could be good or bad. Let's see. Huge, obviously going the upwards, and it's already gone from 7 to 12. That's pretty big. They're not profitable. Oh, they're worse than not profitable. They make $3.5 million, but they lose 218. That is a recipe for disaster. You know what they're going to do? Once the stock gets hot, they're going to do offerings and dilution on shareholders. Let's see, offering. They did one. They may have done two. No, they did one. Nope, they did several. They did two. So what they're doing, once they start to get a ton of excess cash in the stock, they're going to take that and put it towards their business so they can get themselves out of this hole. We are leaving IE. No chart available for KMCM. Why? There's nothing. There's what? KMCM. Maybe I need a refresh. month. Okay, we're gonna remove KMCM. This could have been recently purchased or bought out or gone private, and it's still listed, so we're just gonna exit out of it. All right, Metals Acquisition Limited. All right, let's see what we got. Whoa, this is very volatile. I'm guessing you can tell it's volatile because literally the stock went from 8 to 12 in one day, and it's just crazy. So I'm guessing there is it's thinly traded and there's not that many shares. So I'm guessing it trades at like maybe the volume is going to be low compared to the market, and the shares float is probably under 100 million. Okay, correct. Shares are under 100 million. Volume's actually high. But we're going to pass on this one because they lose 35 million, they make 18 million. Now, could they turn the ship around and have excellent earnings? Oh, wait, look at this. 159 million in sales. Okay. This actually looks like a data issue with Finviz. Sales are showing 18 million, where 2023 they had 159 million. So, but the EPS is going down here. Not a good look. It's trading at 13. The forward P is 31. Ooh, that's the coffin, the nail in the coffin. 0.29. That means they are over leveraged, overstretched. And let's see if we can find this in the balance sheet. I'm not seeing it in the balance sheet. So their assets must be their equipment. Exploration equipment. 0.29, that is horrendous. We are passing on this one. Again, a quick ratio under 1 means they cannot pay. They had to close their doors tomorrow. They cannot pay debts, liabilities, notes, etc. So goodbye. All right, SCCO. This is up almost 100% in 6 months. Congrats. Oh my gosh. Has it ever been this high before? It's at 119 now. It has never been this high before. All right. Wow. Wow. Okay. They're big profitable. They offer a dividend. Price earnings are a little bit expensive. Quick ratios too. That's fantastic. Profitability 24%. Gross margins 42. That is insane. This is a keeper of a stock for sure. This is okay. 7 bill from 2019 to 9.9 bill 2023. Plateaued for sure. Shares outstanding are flat. EPS overall up and to the right. Wow. Okay. All right, I've got 2 minutes. I like this one. But it's already gone. I mean, geez, it's up 400% in several years. We're gonna go ahead and draw some lines, maybe like right there. All right, this bad boy needs to come down eventually. If you've rode this one, congrats. All right, $79 is my price target. How do I create an alert? Right here. So I want to watch this trading under price below. Let's do 90. Okay. So this is definitely super hot. You can tell RSI is 73 on the monthly. Relative momentum is 81. Congrats for those who've been in this one. This is a stellar find. We've looked at the copper ones so far, and there are none that have gross margins over 40%. So I think this one is going to be number 2. Number 1, I think, is still FCX. Their gross margins are 29. That's right up in line with high growth. They are profitable. Their quick ratios over 1. They do offer a dividend. I wish they would put that back in the business. Let's see what institutions are doing with FCX really quick. FCX. Old data says they own 79%. New data, I'm gonna guess 85. 92? 79 to 92, that is a 13% difference to the upside. Wow. All right. That's insane. Great. So I like, again, number one is FCX, number two SCCO. Number three, I guess it's a tie between ERO and HBM. I think HBM may have more. I mean, actually, both of these up in the air. Gross margins is 20% for HCM. ERO is 33%. But again, ERO's quick ratio is 0.6. HBM is 0.87. Again, not that attractive, but not a showstopper. Okay. Now we're looking at a penny stock. This one is ready for a blue sky breakout. Profitable. Quick ratios over 1. Gross margin 25. Up in the high growth area. I like this one. I do like this one. They do have a lot of debt. I just want to check it out really quick. Balance sheet quarterly. Okay. So total assets 1.3 billion, total liabilities 1 billion. So they got a $300 million buffer. That's all US dollars. 117 million cash. That's the most they've had in a long time. Total debt's 460 million, and it's only gotten worse. Liability, or I'm sorry, assets have only gotten better. Okay. Okay, so this one is very interesting. We're gonna go ahead and run my calculation on this because I'm honestly extremely interested in this. This could really have some legs on it, and wow, get back to the teens, possibly the teens. Okay. Okay. All right. All right. I'm oogling over this one. It's up over 100%, so it's super hot. Let's run the numbers here. We're at 22 minutes. I apologize, but I think this one's important. Okay, they have sales of 413 million.62 plus income of 71.6. I'm not including the market cap because it is not over 1 billion. Cash they have plus 117.54, total plus 0. Debt, total debt is 460. That's pretty devastating for my calculation. 460.36. 142. Yeah, divided by 283.61. Yeah, so this is a definitely penny stock worthy. Price to earnings says it's decently valued. I'm not including the market cap, but if it is over a $1 billion market cap, I add it. This is very close. This is equivalent to $7.41 added to this stock price, which puts it at about $8. And let's see what institutions are doing for TGB. Institutions own 19.3%. That is older data. New data shows that they actually own 20%, so a little bit more. I don't think we're going to see, yeah. I mean, we see Goldman Sachs 1.5 million shares. I mean, this is just a pure momentum play. But again, it is breaking out. Okay, so last month there was 74 million shares. I mean, 74 million shares in volume. We are only in we're going into our third week basically, and we're at 18 million. So this is very interesting. If this continues upward with momentum, this could be insane. I could see this company pulling an offering. They did do an offering. You can't trust these small companies, man. Yeah, I mean, copper's at a all copper, all well, it's all momentum. And then we see this person posting about Goldman Sachs saying copper. So honestly, if we get into this one, we're chasing versus if we got into like FCX, we've got a clear Darvis box breakout. And is this one worth $51? Let's do a calculation on this one. I don't see this one doing a offering on this. I just want to check and see if their cash is over a billion. It is. Debt over a billion. Okay. I wanted to check those because I'm just going to shorthand everything for my calculation. So basically, 74 billion, 111 million plus 1 billion, 64 plus 23.81 billion. All right. And we're going to add cash and debt quarterly plus 6.242 billion. Total debt minus 8.656. All right, so we're going to take this and divide it by 1.41. So we're looking at a stock price of around $68.89. The highest we have is B of A Securities. Target price is $53. Institutions and hedge funds. Yeah, this one was 13%. So this is my favorite, FCX. I think TGB might be the most. It might get pretty crazy, but FCX, I do like out of all these. SCCO has gone way too hot, way too fast. Over the past 4 years, we missed out. RIP, whatever. That's all I've got. It's been 26 minutes. If you made it this far, consider subscribing. Thank you so much. Have a great day.